We're live. Good morning. Good morning from Los Angeles. Welcome to Power Hour every Friday, 10 a.m. Pacific, 1 p.m. Eastern, followed by Trading with Sergio every Monday, 10 a.m. Pacific, 1 p.m. Eastern. Welcome to Power Hour. It truly has been an interesting week with specifically today's unemployment numbers, as well as looks like China and the U.S. are about to kiss and make up. So, whatever happened, whatever happened the last month or so, we're just throwing it out of the window. Nothing to see here, folks. We're back to where we were, or we're going to all-time highs. I don't know if that's going to happen or not, but market's definitely strong. Been strong for I think 6-7 days in a row. I don't have too many topics to talk about today, except that I have. I'm going to put the link up later on after I go through my charts and my positions. I've added to some positions today. I opened a couple of new positions. I'm holding on to some positions. So still close to 70% cash, even after I added what I added. My long-term investment account is doing well because I got lucky. I really did. I bought some Kava and I bought some Robin, which I got out actually, but almost a double. I didn't want it. It's a longer term account. I'd rather stay with long-term capital gains in that account. But when you're presented with a double, you kind of have to take it. I'm long Soxel. I'm long Nike. I'm long Google. I bought them at the right spots. Just got lucky, really. I mean, I had my numbers, approximately at certain levels, and it happened to coincide with the sell-off, and great. So in order to protect that account a little bit, I'm buying some debit spreads, put debit spreads on SPX, going out to June 20. I personally don't think, I think this has become a little bit of a joke, to be honest with you all. The joke is this rhetoric, it really did a number on the market. And all the people who bought on the dip, it seemed like they're right? A lot of people called for V bottom, and I said no. So when I'm wrong, I'm wrong. Does it look like a V bottom? It kind of does. It kind of was like another one of these, except this one went a lot deeper and went close to 25% on the NASDAQ and about 20% on the SPX. And we're basically, we're about 5,700. So 6,150 was the high. So we're about 5% from our highs. Like the title of today's live stream says, are we going back to all-time highs? Potentially. I mean, it seems like, if we look at the market at 6150, okay, with the bonds doing what they're doing, interest rates going up actually instead of down, all the economic numbers that came out were kind of soft with the exception of today's unemployment number, but then those things get revised every single month anyway. So I'm not a huge believer in what the government puts out. But creating personal bias is not going to get you anywhere other than make you lose money. So, the market's the market's talking, market's saying everything is fine. There's not going to be a recession. Initially at 6150, we were extremely overpriced, every metric you can look at. And we're moving back there again with not much change, really. I mean, what has changed other than the tariff talk that we had for a month or so? Starting with April 2nd, which was Liberation Day, and we sold off hard. Now we're coming back to that point. There is a 90-day tariff delay. It seems like China is kind of approaching the U.S. now to talk about potentially making peace, let's say. While the bond market's not liking that, obviously, bond market's selling off. Interest rates are actually going up pretty sharply today, and the 10-year we're going up back to 450 levels. is the stock market going to compete? I mean, if the bond rates keep going up, because if nothing has changed and tariffs get nullified, so the inflation scare that we had, one of the reasons market probably sold off was because of tariffs are going to create some sort of inflation. Well, if that's gone, that's why the market's rallying. And were we ever in a bear market? It felt like it for a couple of weeks there, and then now are we back in a bull market? I'm not sure. I'm not a good person to label these things: bull market, bear market. I'm going to trade what's in front of me, and then the only thing I'm going to do is, try to keep some dry powder to look at different things. Although yesterday and today, the market gods are absolutely laughing at me. We have a members-only chat group, and some are here. They already know I posted it saying the market gods are laughing at me. Out of all days, yesterday I put up some charts on the group chat, which we have a Telegram group chat. So if you do, or if you are interested in becoming a member, please go to the YouTube channel, click join, email me, Sergio@sergioavadian.com. I will send you the Telegram chat group link. Bunch of good folks there. And so I posted Rigetti, I posted WeRide, I posted Pony AI, I posted some of the other quantum computing stocks. Literally this morning they all took off to the races. I don't know if it had anything to do with the market taking off, but they've been dormant or going sideways to lower for months now, and sure enough, the market gods are laughing at me. I mean, but that's what the market's for. Experience. Market doesn't care who you are, how much money you have. Market's a mechanism to make everybody wrong, okay? And all the hedge funds that sold, literally at the bottom, while retail was buying. Retail was truly buying. And hedge funds were selling. They're cutting exposure to Mag 7s and all that stuff. Look at those Mag 7s. Like, with the exception of Apple and Amazon, look at those Mag 7s. Netflix, new high. Meta, huge move after the beat on earnings. Microsoft, same thing. Google, to a point, same thing. So Tesla looks like it's breaking out now. So, the market's the market. You can't argue with the market. You can't keep talking about it, saying, oh, it's overpriced, it's this, it's that. No, the price you see is the price you get. Instead of creating personal biases or thinking too much about it, you got to react and you got to act and you got to put your money on the line. And that's it. That's what trading for. As long as you manage your risk correctly, as long as you size correctly, regardless, a trade is a trade. I don't look at any trade as a specific money maker or money loser. For me, it's just a trade. Again, I said this 1,000,000 times. I look at my account, trading account, as a supermarket with a basket, a bunch of positions in there, and one will go up, one will go down, one will go sideways. If I'm doing the right things overall, my equity should improve, period. Account value, account net worth, right? If you have $1 more than you did the past month, you did fine. There are many ways of doing it. You could be directional, you could be neutral, you could be you could be doing all kinds of things. There's no end to, structuring trades. And so sometimes when I see it, and when stocks that I don't buy move, and when stocks I buy don't move, that's a sign from the market gods to me saying, you're not doing the right things. But I've seen it before. You don't get discouraged, you don't get upset. It's just what it is. You're right, you're right. You're wrong, you're wrong. We're all in it to make money, obviously. Certain days it becomes a little bit overwhelming, so those are the days you just turn the computer off and you go away. You take a break, you take a refresh, because the more closely you watch these things, every tick, a lot of people watch every tick and this and that, and it's just not going to get you anywhere other than get you an ulcer. And I'm not saying take it lightly. Obviously, it's money, right? Without it, we can't do much about it, but you can't take this too seriously. I mean, market's there. You use your experience, you use your knowledge, and you execute. Some will be right, some will be wrong, but overall, at the end of the year, if you're positive, you're positive. Scoreboard doesn't lie. I personally am giving myself a D, maybe a C minus in all of this with my experience. Okay, in all of this, in the 20% drop, and then since then the V bottom rally we had, I should have been a lot more active on the short side, and I should have been a lot more active on the long side. But even with the experience that I have, you freeze. And when you freeze, not too many good things happen. But you regroup, you refresh, and then you I don't know, you keep at it. Um, Again, this is the best thing on the planet to do for me. I mean, it gives me the freedom, gives me financial freedom on top of everything else, but gives me the freedom to do what I want to do, what I want to do it. And, there's no better world if you can be successful in this. I mean, there's nothing else. A lot of people look at it as a casino. Some days some days it's turning out to be like that. Specifically, when every tweet or every news item pushes the market down 5% or up 5%, that becomes a little bit of an issue, obviously, depending on what kind of trading you're doing. If you're doing day trading, you could just get blown out if you're on the wrong side or the wrong side, short side, or the long side with one tweet or with one news item. Like yesterday, actually, after Apple and Amazon's earnings came out, market was selling off overnight, right? What happened? Right about, I think it was 7 p.m. Pacific time. China said, yeah, we may be talking. And boom, futures go up. And this morning, 5:30 a.m., unemployment number come out, better than expected, whatever that was. Boom, another 50 handles on the SPX. So imagine if you're short, well, what do? Right? I mean, do you take your losses, get out, and whatever? So yeah, that's where we are. And as far as the macro, I don't think much has changed. Will these tariffs, if they get lifted, because July 2nd is going to be the day that 90-day runs out. As you guys recall, there was a delay on these tariffs on everybody except China. Well, now China is coming around, so I'm sure they're going to delay it a little bit more. But has the damage been already done? Is that 2-3 months worth of slowdown or 2-3 months of lack of trade, is that going to hurt the economy? I'm not sure. Time will tell. Although we did get our first negative GDP print, first time in a long time, but that had reasons for that. The reasons, the negative GDP print had a lot to do with front loading. A lot of companies front loading what they're doing. I mean, look, I think the tariffs are probably going to hurt the small businesses a lot more than the large ones, who are well capitalized and who can shift supply chains from one country to another, although it's not done easily. Like, let's say Apple, right? Every iPhone is made in China and Foxconn, with hundreds of thousands of employees there, right? Okay, well, Apple has been talking about shifting that production to India. Could that be done overnight? Of course not. You need housing. You need millions, literally millions of employees to find for these manufacturers in order for you to buy, iPhones for $1,000. Otherwise, look, I don't understand what the administration is doing. Talk is cheap. They've been doing a lot of talking. Tariffs this, tariffs that, position of strength, all that stuff. Doge, right? Cutting the waste and lowering deficits. I'm all for it. But we're, pretty soon people are going to look for results. What are the results, right? We can't manage an economy by talking. Okay, so tariffs. Okay, we put the tariffs on. We bring him to the table. We talk about it. We settle. No tariffs. Wide open. Everybody trades. Okay, great. Is anything going to change? Is manufacturing going to come to the U.S.? Our factory is going to be built in 6 months, a year. Are good paying manufacturing jobs going to come back to the U.S.? I don't think so. I honestly don't think so. Not because I don't want it. I want it because middle class has been destroyed with this trickle down bullshit economics that we've been working with. Look, again, I'm a capitalist, don't get me wrong, but I think there's a reason for the top 5% owning 90% of the assets in this country, because that's how it worked. The trickle down never somehow trickled down. You go ask Middle America. So Trump administration is talking a lot about Middle America, a lot about cutting taxes for them, a lot about bringing jobs back, high-paying manufacturing jobs. I'm all for it. Is it feasible? Is it possible in a short period of time? I don't think so. I hope it works. I hope it works out. Then I think we'll have a booming economy that depend on local production and local consumption. Wonderful, amazing idea, right? Doge, same thing, cutting deficit, great, 37 trillion. We should never gotten there. Well, we are there. Well, what is the solution? Cut the deficit and cut the deficit spending and put Washington in order. Is it going to happen? Is it going to happen in the scale that it should happen? I don't think so. The reason is 37 trillion. There's a lot of IOUs that we have out there. We have about 9 trillion of them coming due this year in 2025, and we have to refinance those. We can't just say we're not going to pay those IOUs. How do we pay those IOUs? Either we're going to print more to pay those out, clean the books up, or we're going to kick the can down the road, issuing new bonds, new notes, new T-bills. Well, the interest rates on those are going higher. Why is it going higher? Because the bond market is looking at all this and saying, okay, inflation is going to come back, or is never went anywhere. Trump administration is telling the Fed to lower rates. How can any administration tell a Federal Reserve to lower rates while inflation is not dead, unemployment is full, or employment is full, like today's numbers, right? Economy is doing well. Fed doesn't lower rates when things are well. If you do that, then inflation is going to kick in harder. And at some point, they have to raise the rates again. So lower rates don't work with a full functioning 8 cylinders on fire kind of an engine. Okay. And the economy is looking like it's pretty strong. So initially market priced in a soft landing, which has never been done. So now market's pricing, then in a month or so, because of tariffs and all the other stuff, market priced in a recession to a point. And now market's getting rid of that recession. We're back to Goldilocks. This is too much. I don't think economy works like that. And so I'm not buying the BS, honestly. I'm not buying the BS. That doesn't mean, I'm not going to participate. I'm going to participate. But the best thing to do at times like this, if you're confused, which I'm quite confused at the moment, with what's happening with the macro. I'm not confused with my trading. I'm confused with what's happening with macro, is, just stay on the sidelines. Markets open every day. We don't need to do any trading because we want to trade. We want to be participating. That's like, that is definitely the casino or the adrenaline kicks in and you want to be participating in something. You're looking at a stock, you're thinking about it, yesterday goes up 10%, another 10%, another 10%. Well, you go, okay, FOMO and then get in. No, I don't look at things that way. I have time on my side, and then I pick and choose the trades that I think are proper. But then with the macro picture so blurry at the moment, I have no idea. I had a pretty good thesis on my TLT trade, on the interest rate trade. I'm still profitable on the trade. I was really profitable on the trade a couple of days ago, actually. But when the economic numbers were this strong, obviously interest rates are going back up again. So when the interest rates are going back up, that position is suffering, although I'm still profitable. But then now I have to rethink that position. Is the thesis still valid? Is macro so strong that the interest rates don't have to go down? Because the thesis was that interest rates will go down if we go in a recession. There's no ifs and buts about that. Well, now every economic data that's coming out is not pointing out to a recession. At best is pointing down to a slowdown because of the tariffs and the uncertainty and the supply chain problems, all that stuff. I don't know. So now when the picture becomes blurry, you should pull back instead of press. And so that's what I'm doing, right? Still up for the year, about 30% for the year, 28% now, because today was going backwards. I have some put debit spreads that are kind of going down. And my TLT position gave up literally, I think I was up like 5K on that position. Now I'm up about 1,800, 1,700. So when you have, still open, but I'm not adding to it. I'm not going to press it. Over the weekend, I'm going to think about it. I'm going to say, okay, is everything that I'm seeing still valid for these positions? And then without pressing, allocating funds correctly, you'll just go in and then do what you need to do. So, no panic in this neighborhood. So good morning, everyone. It's all my members. Good morning, everyone. Good morning. I'm going to go to my charts. If you guys want me to talk about something, just fine. I'm going to put up the link, by the way, for you guys to come on if you feel like coming on. But let me put up my positions first, and then we'll go through a few charts, and then we'll see where we are. Hopefully you guys can see all this. I'm pretty sure you guys can. So here we go. What do we have? We have 200 Google 2x ETF calls going out to July, but I have at the same time I have sold expiring May 16th, July 45 calls against it. So waiting for those Mays to expire, and then we'll see where it goes. I have so this is the main position that I opened up today, and I'm putting up some more, adding to it actually. So where are we? We are, I have 15 SPX June 20th expiring, not the AM version, the PM version, regular expiration. Put debit spreads. So I have 15 of the June 5400, 5380 put debit spread. My cost is exactly, let's see, 75. My cost is right a touch under $5, and index is 5688. So I'm way out of the money. But when you do put debit spreads on these things, due to the fact the volatility is so high, they don't die obviously right away. I mean, they're going to lose value probably, but I have until June 20th. I think there's going to be a mean reversion sell-off, and I'll be fine with these positions. It's also a little bit of a hedge in my long-term investment account. So I'm at a touch under 5. So on that position, I'm down about 1,100. Well, it's right here. Actually, that's about 832.9, 31.6. Yeah, about $1,200. And this morning, when the market took off after the Chinese news came out, I put on 5 of the June again, 5,600, 5,580, 5,575 put debit spread at 725. And those I'm up about $50 or $100 or something like that. So I just put those on, and I'm going to add to the 5,600, 5,575s at 650 debit. These are put debit spread, just straight directional, basically 12-point straight directional. And I have 5 more to get into the 5,400, 5,380 put debit spread at 330. So what happens with put debit spreads? Okay. Market doesn't go down, it stays here or goes higher. I'm putting up basically on the 5,600, 5,575, $7.25 to make 25 potentially, right? But the worst I can do is lose 725. I cannot lose more than that. Market can go to 6,500 SPX. It doesn't matter. Same thing with the other ones. I put up 5 to make 20. Do I have to wait until the last day? Of course not. If the market does sell off a couple, 3 percentage points here after, it did what it did, will they be profitable? Yes, definitely they will. So here's my TLT position. I'm long. Well, I'm short 25 of the March 2026 85 puts with a cost of 530. They're about $4. I am long. So the position is kind of a synthetic long with a cap on it, meaning, so I'm short the March 2026 85 puts on TLT. I'm with that credit, I'm long March 2026 95 calls, and I'm short March 2026 110 calls. So overall, this trade, I did it for about 275 credit. Okay, the reason I did that is because I don't mind owning TLT. 85 minus 275 would be 82.25. So I don't mind owning TLT because going back to 2002, TLT low is about 80.5 to 81. I don't mind owning 2,500 shares of TLT at 82.25, and then I can have other choices to do. But the reason I put this position out to March of next year is because interest rates don't move like Apple does or Google does or whatever. So on that position, still up about 1,800, which is not bad. And today I started opening a position. This was one of the stocks actually that I looked at yesterday, posted on the chat group. So I bought 1,000 shares of WeRide with an average cost of 719, 720, let's say. It's about 715. WeRide is autonomous vehicle company in China that's supported by NVIDIA, and there's another one called Pony AI. With the options, what I did is I put a short strangle on, right? So going out to June. At the same time, I sold a 512.5 strangle after buying the shares. So this is like a covered strangle, basically. I sold 512.5 at 75 cents. So, okay, what can happen here? WeRide, WRD is the symbol, stays here. You guys can look at the chart. We'll look at the charts in a minute. But NVIDIA actually put the money up, 25 million into the company, and stock had gone public at 15. It went up to 44. I'm buying it at 7, so about half the IPO price. Yesterday it was 6.5. I'll add to this position another 1,000 shares, and ultimately, what's going to happen if it stays here or if it goes lower or whatever? But anyway, basically, if it stays between 5 and 12.5, I collect that 75 cents for June 20th. So my cost of 720 will be lowered to 6.5, and then I'll do it again for July. I'll sell the strangle again. As long as I'm holding the shares, I'm not naked. But okay, let's say it's below 5 by June 20th. Well, I took in 75 cents. 75 cents deducted from 5, which is the put strike price, at 425. So I'm willing to buy another 1,000 shares at 425. Or stock takes off, flies, goes to 12.5. I get called away. 12.5 plus the 75 cents is 13.25. My cost is 7, so it's almost a 90% profit. So either way, I like the position. Even although it's up 8% today, I still like it. I'm fine with it. So I will add to it if we get down to maybe 6.5 or to back to where it was yesterday. But that's where we are. That's where the positions are. Again, 70% is cash. The rest is involved. Obviously, the mark-to-market on TLT is happening. It's costing me about $36,000 in buying power to keep this position alive. Still up $1,800. I mean, look, I can take the profit, but I don't want to. I think all this is happening to me is BS, all this gyrations. I still think economy is slowing down. I'm not sure a recession, but definitely slowing down. And I think interest rates ultimately are going to go down as opposed to going up, although the bond market's not buying anything the Trump administration is saying. The Fed is saying we're going to stay put. We're data dependent. So I'm sticking with the Fed on this one. Not that I'm a huge fan of the Fed, but I am sticking on this one with the Fed. What else? That's about it. I mean, pretty clear, right? Hopefully you guys understood that. Let me go to the front screen. Let me see if you guys have any questions. If not, then I'll go to some charts and then invite you to the stage. Let's see. No, okay. No, nobody has questions. Okay, cool. What else? Okay, let's go to charts. Present. Cool. Let's do it. Okay, let's go to charts. Let's go to big charts. Okay, so let's take a look at this. Is the SPX 2-minute chart. We're not interested in that as much as this one. This is the daily chart on SPX. Okay, we are taking out the 200 EMA, which I thought was going to be resistance. No, we just went right through it like a hot knife through butter. This was our bottom at 48.35. Our top was 61.50. Pretty decent sell-off. This big candle day or big up day was when Trump announced the delay. We kind of retested. Now I can draw this uptrend. As you guys know, I don't like drawing too many uptrends. We're coming into resistance a little bit here at about 5,700. So, we'll see. We'll see where we go. Now, why am I putting the put debit spreads on? The put debit spreads on, I'm putting on 5,600, which is down here. A mean reversion trade kind of a thing, pull back to 20 EMA is at 54.83, pull back to 50 EMA is 55.71. That's why I did the 5,600 to 55.75. Putting up 7 to make 25 is pretty good, and also gives me protection on the downside. But the other things I'm doing, so this is SPX, looking good. I mean, MACD turned up. Actually, MACD almost put in there like a bullish divergence here, but we're still under 0, so we're not out of the woods yet. I don't think we are. I don't think we're going to take a straight shot to all-time highs, but time will tell. This is triple Q, same thing, right? Uptrend is drawn. This was the uptrend that we broke down from, so we're snapping back to that. Again, technicals sometimes work, sometimes don't work. I do watch technicals, but I don't swear by it. You got to involve macro as well. So that's what the triple Qs look like. We'll go through some of the, we'll go through the positions actually. This is GGLL. Looks okay, 50-day EMA resistance. Next stop, if we take that out, should be about 37. So my 45 GGLL July call should be okay. We'll have time on that. This is TLT. We were on our way. I put the positions on right about 85 range, 86 range, and we got up to over 90, and that was it. Now we're pulling back. The reason, again, I did this trade was going back. If we look back here, all the way back here, 2022, TLT was about 85. Low in 2022, 23. 2002, 2003, not 2023, is about 80.5. This is going back 22 years on this chart. So as was the TLT, that's why I'm putting the trade on. I don't think rates are going to go higher. Now, if we do go higher, if we go above 5% on the 10-year, market's going to eat it. There is no ifs and buts about it, okay? So higher interest rate, high valuations don't work together. So both cannot be working. Either TLT is not going to work or the market's not going to work, one or the other. So you guys got to really be careful about that. Today's opening position on WRD. This is WeRide. Well, here's what happened. This is when the company went public, went sideways, sideways, sideways. NVIDIA announced a partnership and an investment in it. Went from literally like 15 to 45 and pulled back all the way to 6 range. 603 was the low. We're at 712. I will add to this position. I don't mind it. I don't mind owning more, buying more at 425, and I don't mind selling it at 1325, which is right about the 50 EMA now. That's another position. And SPX, we talked about it. Why did I buy the put debit spreads? Put debit spreads, mean reversion trade, really, more than anything else, especially the ones I bought today at 725. We should pull back to 50 EMA, 20 EMA, and then if we're going to continue, we're going to continue, right? Because we can't write all this off. There is some things that happen here that's, still valid. What happens, China tomorrow over the weekend says, go F yourselves, we're not coming to the table. And then what happens? We sell off 5%. I mean, it's getting quite a bit of a joke, actually, to be perfectly honest. But it is what it is. Even I think this was the smaller version of it was the Japanese yen carry trade. I'm circling my cursor here. We did the same thing. We rolled over, sold off, and then we continued. So there will be a rollover, sell off, maybe pull back to the uptrend line. And, I'll be okay with the put debit spreads. I'm not concerned. The other thing I'm going to do is I did it already, but I'm going to do it with the 0 DTEs. I can sell already put credit spreads against those long debit spreads, and that should be okay. As far as charts are concerned, let's take a look. Apple down about $8.50. It's okay. I mean, earnings weren't horrible, but they weren't great either. Their service part of the company is kind of slowing down. Amazon, great earnings actually, but then they said the guidance is uncertain due to tariffs. However, the other ones, Meta, double bottomed. I mean, it's easy to say these things now, of course. That's why technicals always look back, not forward, but double bottom. And if you were trading this, you give it a shot on the double bottom, okay? There is a bullish divergence on MACD, and earnings were amazing. Above the 50, above the 20, above the 200 DMA on any pullback. Meta should be bought now as opposed to anything else. Microsoft, same thing. Double bottomed again, right? Look where we are, right? I mean, this stock is a $3 trillion company, 360 to 440. I mean, these are some massive moves in these companies, and is it justified? Maybe. If it's not, it's not. Everybody's opinion is different. Um, let's take a look at a few more charts. Let's see. AppLovin. That's actually just kind of bottoming out now. I have my eye on that stock. Chinese stocks are doing well, obviously. They did give us a chance to get back in, right back to the 200 EMA. Now going back to the highs, Baba, and although a couple of them are actually much more reasonable now. Baidu, of course, big rally, 75 to 90 already. JD, I think JD is good support down here. JD and Billy, I think, are the underperformers, but I think it's definitely worth looking into. And Billy, again, pullback, gave you guys a chance. But if you're not interested in individual names, you could be looking into the 3x ETF of the Chinese market, the FTSE China 20 up to 35 already. I mean, you got to look at these things. Netflix, amazing earnings, really new high. Look at this thing, right? Look at that thing. I mean, came and kissed the 200 EMA, 821. We're at 1152. We're 330 points higher. Okay, well, there you go. There's your outperformer. There's Tesla. Tesla is definitely looking pretty good. We had a down complete, like, earnings were out here. Everybody expected horrible earnings. Stock goes down. Nope. What does it do? It goes up. Breaking out of the definite trend line and building a little bit of a bull flag here. Tesla may be ready to run if the market does cooperate. Of course, trade TSLL. I'm definitely going to participate in that transaction going up. Robinhood, I really like. Earnings were great, really great. I love this company. That's why I bought ROBN, which is a 2x ETF. It's a little bit of a resistance area here, about $50. I mean, these stocks are overvalued, but doesn't mean anything to the market. I got lucky and bought this at about 780 range, and I got out actually a couple of days ago, about 1480. It's almost a double. It was in my investment account. Kava, I bought at 82. We're at 96. Got lucky, I'm telling you. Got lucky. There's no ifs and buts. I bought Nike about 52, 53. We're at 58, which is fine. I'm long Unity Software. So, my long-term investment account is actually doing well. I'm not concerned with that. I bought Soxol. We also had a nice trade with the group on Soxol. As a synthetic, long 7.5, long 12.5, short 7.5 puts, long 12.5 calls. That's doing fine. Well, we're out of that position already. What else? If there's any questions, please put it up on the chat. Of course, how can we not talk about MicroStrategy and Bitcoin? MicroStrategy knocking on the door of 400 and a little bit of a resistance here because Bitcoin never participated in the downside when the market sold off. So this is IBIT to the ETF of Bitcoin by BlackRock. Yeah, I mean, Bitcoin 96, 97,000 now. So I've been DCAing every Monday, as you guys know if you follow me close enough. What else? ELF. Somebody asked me about that the other day. ELF. No, it's a dead stock. I mean, I don't know. It's okay, I guess. Just because it's cheap doesn't mean it's anything else. Goldman financials are doing well, obviously, in all this. Look at that. I mean, that thing completely got destroyed, went from 672 to 450. I mean, these are not small companies, okay? And now we're coming back into a little bit of resistance. Same thing with JP Morgan. Traded SoFi successfully. I was long SoFi in my investment account. That got done. JP Morgan going from 280 to 200. Right, that's we're like close to 40%. Now we're back to 252. SoFi, earnings are out. It's kind of a struggle stock, actually. It looks like another top when the earnings came out. But it's not a JP Morgan. It's not a Bank of America. But I think it's just an online bank. These are the trades I missed from yesterday today. Hims and Hers. They had a massive announcement, that they're going to start offering Novo Nordisk's Ozempic on their website. Well, there you go. That always 72 to 25 to 40. I mean, these things are moving. So if you're in it, good for you guys. So these were the stocks that I posted on the member chat group yesterday. Rigetti was one. It's never too late. Definitely breaking out. I'll take a look at some options. I may actually join the party in here, because these stocks have massive short positions in there. So you got to be really Qubit. Qubit is another one that's coming off base. These are the types of setups I like. I don't know if Qubit has options. Let's take a look. Yep, it has options, so I may do that. Let's actually take a look on Qubit options if there's any activity for May 16th. Let's see, out of the money calls, 9.5 calls, not that much for a gamma squeeze. Let's take a look at the Junes. Actually, May 9th, next week, short term. You know, how the gamma squeezes happen because, not in Qubit, because people buy these way out of the money calls, and then the market makers have to hedge by buying the underlyings. So June's, not really that much activity. Let's look at Rigetti. Rigetti June's, yeah, they're a little bit more activity there, but June is too far. If people are going to buy these things, they're going to buy next week's. Yep, that's where the action is at. Look at all this. We're trading on Rigetti. We're trading 5x, 2x, 3x of open interest today, with the May 9th expiring next Friday. Options, May 16th. Not as active, but still reasonably active. And June's, yeah, June's have some activity actually. June 10s are $2. Stock is 10. Why are they so cheap? Huh. Interesting. Am I looking at the right thing here? Those are in the money by $0.75, and they're only $2. Okay. Well, we may do something there. We may do a little bit of a synthetic action there. Let's see the 15s on Rigetti. 15s are 65, 67 cents. Yeah, these things move when they move. Short interest is massive on these things. I mean, look. So some of the stocks that I was like looking at, everything is moving today, right? So this is another one I posted was Pony AI. It only moved 30% between yesterday and today, you know. I mean, what can I do? That's the gods talking to me, saying, Serge, you need to be a little bit more aggressive, buddy. That's why I did the WRD, but I'll add to it. I'll add another 1,000 shares with a short strangle. Pretty good volume today, so I'm all right with that. Let's see what else we got here. A couple of stocks are getting really smashed. One is XYZ, which is Cash App. Only down 20%. Wow. How do you see? This is the problem I have. Like, how do you deal with one of these? If you just touch like cash secured put or something, how do you deal? How can you roll and how can you survive? I don't know. People like, I don't know. Roku had a terrible earnings, down 10%. What else are we looking at? Let's look at, well, MSTR, MSTU, we talked about that. MSTR almost at 400. MSTU, which is, we traded a lot, 2x ETF of it, is almost $9 now. Missed this rally, of course, but MSTR on a pullback is definitely a buy. It's going with Bitcoin, basically. You just can't. And the winner of all winners, Palantir. 125.41 high. We're at 123.40. So earnings are coming out. Bleeding nosebleed again. Maybe is there a double top and order? Is it going to happen? I'm not going to anticipate. Wait for the earnings to come out. Maybe go for a blow off top. Go short again. I can't buy these things. I just can't. I have a mental block buying a stock that's selling 200 times revenue. Forget earnings. There is no earnings. Are they all moving now? Of course they are. Qubit is moving, and Rigetti is moving. QMCO is not moving yet. Is that the next one? That's another quantum stock. See, these are the patterns that I like, okay? You know, they just go parabolic, crash, go sideways, digest, next move up, right? And they double, triple. I mean, these things are fast-moving, fast-acting things. So TEM, Tempest AI, yeah, that looks like it bottomed. And Tesla, definitely a bull flaggish kind of a thing, breakout, whatever it's going to happen there. Trade desk. See, these are the things that just wipe me out. Like when you look at this 140 down to 40, how do you manage that? I don't know. Wise key, that's moving. That's another one of those. That's another one of the computer, quantum computing software stocks, actually. Yeah, I like that. Those are there. What else? That's about it. Keep my powder dry. Do what I need to do. I'll take a look. SPX, we're at 5690, almost 5700. And I will add to the put debit spreads for a mean reversion play, but nothing more. You can't be bearish looking at these charts, okay? You just can't be. All you have to do is, you know, be balanced enough on the long side as well. So yeah, that's where we are. And let's go. Let's go to the front. Let's see. Qubit, I looked at it already. Okay. DJ Frank, are going to buy the put on PLTR today? Okay, so hello, everyone. Here's the link. Let me put the link up if you guys want to come on. No, I'm not going to buy the PLTR put today. Trying to buy the SPX put debit spread. Yes. Good morning, everyone. All right, that's the link. If you guys want to come on for a few minutes, 10 minutes or so, you're more than welcome to grab it and come on. There it is, right there. So yeah, that's where we are. And you know, trade what's in front of you. Don't question the market. And DJ Frantech. No, I'm not going to buy the puts today. Well, I don't know when the earnings are. Earnings are, I think, I may be buying puts on Uber. and PLTR, but not just buy puts. I'll just do probably kind of a synthetic. But we'll see. Not yet. Not yet. Yeah. Anybody want to come on? No? No? Yes? No? Any questions? Hold on a second. Sorry, muted. Yeah, that's where we are. And if nobody wants to come on, then I'm going to say goodbye and see you guys on Monday. Trading with Sergio. Let's see where we are on Monday. Let's see what happens over the weekend. Let's see if Trump and Xi kiss and make up. And look, you know, it's becoming comical, honestly, now. To me, is like, but the markets are too sensitive to these things too, right? I mean, we can't disregard what happened, obviously, but it already happened. And proves one thing. What Warren Buffett says. What does he say? When there's blood in the streets, you buy. And there was definitely blood in the streets a couple of weeks ago, and now everything looks like we forgot all about it. But market has no memory. Market will forget about things. And market's a pricing mechanism. It priced in disaster to a point. Now it's pricing in all clear, no problem, no recession, economy's fine, tariffs are going to go away, inflation is not going to come back. So that's what market's pricing in. And we'll see. We'll see if they're right or if they're wrong. So with that said, have a great weekend, everyone. See you guys Monday, Trading with Sergio. And members, next Wednesday we'll do a live, members only live, between 3 and 5 p.m. Pacific. Hoping they're learning. It looks like they are. We have some active traders, actually. They do mostly cash secure puts and things like that, but I'm learning from them, they're learning from me. So thumbs up, please. Share the videos, share the streams, and that's it. You guys have a good weekend. See you guys on Monday.